Listen, I don't want to be the guy that continues to bash on Canadians' favorite assets, but the housing market has run absolutely wild over the past year, and it's just not sustainable. We'll be breaking down the record that we set in April, and it's not a good record at all. Obviously, we'll touch on the percentage growth that we've had over the past year. I know it's been a very good asset since the 90s, probably the last time that we've seen a decline. But, realistically, what goes up must come down. I'm not saying that there's going to be capitulation on the market, but it's definitely something that we should be looking at in terms of wage growth over what the housing prices have done. So again, we'll touch on what record we set in April, and we'll touch on what factors are leading to the point that we've gotten to today. But if this is your first time here, my name's Nick. Welcome to Waste of Wealth. Before we get into the video, I have a huge favor to ask. If you learn something new or you get some value out of the video, hit that like button for me. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. I would definitely appreciate that. Let's talk about housing. This article here will allude right off the bat to what we are talking about, and that's the fact that Canadian mortgage debt grew by 18 billion in April. This is a record, and it's not a good one at all. Personally, I do not like debt. There are people that like to use leverage or debt in order to increase their net worth. I personally like Warren Buffett and his quote, when the tide goes out, you'll see who is swimming naked. That alludes to the fact that when things turn sour, you will see who is levered up and who is protected. So we can see here, Canada took out almost 18 billion worth of new mortgage debt in April. That's the fastest monthly increase on record, and enough to bring the total housing debt to almost 2 trillion. Now, why is 2 trillion an important number? We'll learn in a bit, but we see that Canada had almost 1.69 trillion worth of mortgage debt at the end of April, and after the 12.9 increase in March, followed by the 17.7 in April, this means that it's grown by 7.8% in the past year. So obviously we can touch on why numbers are so high. We have people that were locked down, looking to get out of cities. They started moving to suburbia. That's part and parcel as to why they've gone up. We've seen people starting to do renovations in their home because they're not able to go anywhere, or renovating so that they come in and enjoy those renovations without having to do any of the work. Interest rates are super low, means money is cheap. People can go to the bank, and if you have the right type of credit, income, the whole kit and caboodle, you can go and get use maybe some leverage in your existing home to get a secondary property to rent. And that kind of alludes to why and how we're at today. But we see here, going back to this article, home prices continue to climb to an average of just over 688,000 in last month, a figure that has increased 38% in the past year. So it's not Vancouver, it's not Toronto. Canada's housing bubble has gone national. Do me a favor, go on realtor.ca, go look at places in Halifax, go look at places in rural Saskatchewan, go look at places in Iqaluit, Yellowknife. I was shocked to find places in Yellowknife going for $500,000, and no discredit to the places there. I kind of align it with job growth, wage growth, and I was very shocked to see that number being so high. So it's not just a problem in the main city centers. This is from coast to coast. So we talked a little bit about why the rental boom has fueled the credit growth, and that's something that is something to definitely consider. But it is interesting to see that people have gone to the Home Depots and renovated uh, kitchens, bathrooms, kind of the places that people most look for. So that is definitely driving home prices. If people put in 10, 20, $30,000 worth of renovations, they're going to want a massive return. And as we saw in February, March, they were getting those returns and prices were increasing what seems like by the day. So that was something that was super interesting to watch. We also see, and why I mentioned before, the $1.9 trillion worth of debt in mortgages and in housing alone. Well, that's almost as much as the Canadian economy. The Canadian economy's GDP is $1.97 trillion. That means that our housing market is worth our entire economy. For me, that does not make sense at all. If we look at this chart, we can see the massive amount of uptick that we've had as a country, as a nation, the amount of debt that we've taken on. Eventually, we will have to pay this back. So, I mean, listen, I'm not calling for a capitulation on the market. I'm not saying that housing prices are going to drop. They're putting new measures in place to make sure that, whoever is taking on this house can pay it. But if you look at somebody who makes $100,000 not being able to buy something in the GTA, average home price being around $1.1 million, that's like 10 times, 11 times their salary. So they'd be priced out of the market for a pretty good salary. You also have somebody who could be taking on five, six, $700,000 worth of mortgages. If you're looking at somebody who's paying 80% of their total income directly to their homes, how else are they going to spend in the economy? How are they going to find money to go out to dinner, to buy new retail? You're really fixating your economy on one certain section, and we know that the government is definitely favoring this. But when we talk about how are they going to get the money to do the other things that they enjoy, the vacations, the fact that other debt is also rising. So we're not really seeing credit card balances increase, but other loan products such as personal loans and lines of credit were up this month. So driven by that, housing debt, total debt loads rose to 2.4 trillion. And that's definitely the fastest monthly increase since 2011. So credit card debt is not an issue as of right now. We've definitely seen people that have been in lockdown and haven't been swiping that credit card as much, I being one of them. But there is definitely a concern for anybody that's bought a new home. If you have a large percentage of your income going towards your mortgage, but you still want to do those things, then you're going to be swiping that credit card as we continue to open. So yeah, that's just my thoughts, my concerns. I'm definitely worried about where we go from here. Could we sit at this level for a bit? I'm definitely seeing a flat period in the market. I think a lot of people are waiting for what the Bank of Canada is about to come out with in terms of when they actually raise the interest rate. Tiff Macklem alluded to 2022 towards the end of it. So are people waiting for that? Will we see kind of a dry period? I wish I had a crystal ball. Only thing that I know is that there's mass market breadth, meaning that all properties across coast to coast have gone up. Eventually, what goes up does come down. The correction, is it a crash? I wish I knew, but it's definitely something that you may be able to get a buying opportunity when those rates actually do come into play. But I hope you enjoyed the video. Let me know down below what your thoughts are. Is this something that you could see going up 20% over the next 4 or 5 years, or is this something that's going to go up 20% in 1 year, much like we saw in 2020 to today? Or are you worried? Are you concerned about where we head, where this market is going to go? So let me know down below what your thoughts on it. And if you're still with me, don't forget, hit that like button. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. Hope you have a great week in the markets. Happy trading.